Adrian Hope-Bailie is a South African fintech specialist and co-founder of Fynbos Money. Fynbos Money has created a new investment platform for individuals that makes investing simple and accessible. They are disrupting the status quo, charging a fixed subscription fee rather than complex fees based on the size of an individual's investments. Their mission is to empower South Africans to feel confident in how they manage their money. This is my Entrepreneurship Journey podcast, and welcome. Adrian, thank you. Thank you for coming to the podcast. It's such a pleasure to have you here to talk about Fynbos Money and to teach us a thing or two about investing. Welcome.
Thank you. It's very nice to be here.
Yeah. Can you tell us, Adrian, what is Fynbos Money?
Sure. It's evolved, I must be honest. It evolved from solving the problem more than a very specific solution that we had in mind. But what Fynbos Money is a digital investment platform. So we allow people to access various savings and investment products through the platform. And it's unique in that we don't follow the traditional industry norm of charging based on what they call assets under management. So normally people, if they invest through a financial advisor or through traditional investment platforms, would get charged a fee. Normally it's called a platform fee or an administration fee, but they'll get charged some sort of fee based on what's known as assets under management. So the total that they have invested, and it's usually a percentage. We decided that that was quite an updated way of pricing things in the digital era. And, if you build a digital product and people access your product online, then you should charge the same depending on, the same amount to each person based on the value you provide as a product. So we charge a flat subscription fee rather than a percentage-based fee, which is quite novel and unique. And the goal for us really is to give people confidence. Our mission is to empower people with tools to manage their money with confidence. And the problem we sought to solve was we saw, especially amongst our own friends and family, people with the means to invest, they knew they should be putting some money away, whether it's for short-term goals or long-terms with retirement or wealth, generation goals, but just didn't know where to start. And we felt like there just wasn't a good solution in the South African market for people who wanted to be empowered to take some control of this part of their life themselves, didn't want to hand it all over to a financial advisor, and didn't want to rely on, the uncle who studied accounting or whatever the case may be to give them advice. And the reality is a lot of this stuff is I don't want to say common sense, but it's well documented. The basics of how to get started with savings and investing and what to do is pretty well documented. It's all out there. It's not, we're not sharing any new knowledge with people. We're just trying to put it together in a way that's easy to follow, easy to understand. And ultimately, we do some of the hard and boring work for you. That is also often the thing that just gets in the way for people.
Yeah. It's interesting. And what are these different products and levels that you offer? You said, I like that model.
Oh,
that,
yes.
You charge a flat.
So it's evolved. When we started out, we started like all of our customers, and we had to start with the basics first. So the first thing we wanted to solve was that there are a lot of people out there who just don't have an emergency fund. And I think if you ask any financial advisor or any person who's, trying to advise someone on the basics of personal financial management, where should they start? The first question they should ask is, have you got an emergency fund? Do you have emergency savings? And so I think that knowledge was pretty common. But when you go out into the market and say, okay, cool, where do I get an emergency fund? Nobody has a product called an emergency fund. There's different savings accounts, and there's money market accounts, and there's products that you can use for an emergency fund. And so that was the first thing we wanted to solve. So we put out a product. We built a product called an emergency fund, and it's backed by Alan Gray money market investment, but we do give you much quicker liquidity. So you want the returns of something like that gives you inflation beating returns, but you also want to have access to your money in an emergency. So we took the Alan Gray money market fund, and we added the ability to get 24-hour withdrawals, and we built something that was specifically an emergency fund. And what that needed as a sort of complementary product was then, what about long-term investments? And that's the other common misunderstanding is, if you're investing for the long term, and now we're talking decades, where should you be putting your money? And people, I think, misunderstand risk, and they misunderstand volatility, and how to invest for goals specifically. So we tried to just address those two things initially. Everyone should have an emergency fund. Get one set up, figure out how much you should have in there, get that up to its desired level, and then think about investing for the long term, because that doesn't take a lot of planning or thought. That's just putting money away consistently every month, for when you stop earning an income. And the ideal vehicle for that, for almost anyone, and one that is so underappreciated in South Africa, is the tax-free savings account. And so our initial product that we launched was really just those two products, those two features, an emergency fund and a tax-free. And that's still available on our platform today, and it's still available for free. We offer an emergency fund and a tax-free. But our goal was always to build more value than that, to offer a platform that really gave people this confidence than what they were doing. And so we've continued adding features over time to support more use cases and to really help people round out their financial wellness journey, to fill all those gaps. And so over time, we've added additional features like savings pots, so you can save for specific goals. The ability to save for your kids, very, very underrated thing to do if you want your kids to have a really great head start in life. Like, don't miss out on those 18 or 21 whatever it is years that you could be investing for them before they start doing it for themselves. That's a huge impact. And then we've started adding more and more funds to the platform. So initially we started with just 5 in the tax-free savings account. We're going to go live in the next few weeks with over 100 different funds that you'll have available to you. And we continue adding, other basic features that everyone should have available to them. So keep an eye out for a retirement annuity down the line, and other features that we think are just the essential building blocks. We want to make it dead simple for any South African to get the basics of financial wellness in place. And if you want more advanced features, the child accounts, the savings pots, and the other features that are coming down the line, that's where you pay the subscription. So it's really just 2 tiers at the moment. There's the free tier with the emergency fund and the tax-free, or you can pay the subscription to have the additional kids accounts, savings pots, additional fund choices. And over time, we'll continue adding features to the paid subscription.
And that tax-free savings account, Adrian, do you feel like, there is enough understanding generally from the public of what it is about? What is this tax-free savings account? Is it popular? Do people generally know about it?
No, it's amazing to me, actually, every time I talk about it, how poorly understood it is. I was on a a radio interview a few weeks back with a
Yeah.
DJ, and he had never
Yeah.
even heard of it, let alone understanding it,
Yeah.
and there's a guy earning, a good salary. It's 100% should be your first port of call for long-term investing. It's crazy that all people don't understand this. And it's a strange thing because their contribution limits. So when the government introduced the tax-free savings accounts legislation in 2015, they put some limits on how much you can put into a tax-free savings account. And that was to protect themselves. They didn't want everybody to just, put everything into their TFSA and never pay any tax. So the limits are annual and lifetime. So you have a 36,000 Rand annual limit. So that's the most you can put into a tax-free savings account each year. And then you have 500,000 Rand over your lifetime, which seems like a lot. But if you're contributing 36,000 every year, it'll take you 14 years to use up that 500,000 Rand limit. And if you think about it, if you plan to save this money to retirement, you could be saving for 40, 50 years before you start drawing down. And if your parents started this for you, when you're a child, they could hit the limit before you're even an adult. And that sounds scary to people. I think we too many of us have this scarcity mindset, that if as soon as there's a limit, we want to use up the limit. But actually, the tax-free savings account is it's incredibly powerful because you don't pay any tax on your gains. So that means no dividends tax, no interest, no capital gains. And so the longer you leave that money in there, the more benefit you get out of the tax savings. Because if you think about it, if you invest for, 50 years, let's say, so let's say you put some money away in your kids' tax-free savings account and they have the discipline not to take anything out until they retire. That could be 60, 65 years. That the vast majority, more than 80% of the money in that account, in fact, over 65 years, probably even more, will all be growth. And so that means you're paying tax on all of that money. Now, if it's in a tax-free saver, you pay zero tax. I mean, it could quite literally be saving you millions and millions of Rand. So it's, I think a lot of people think that the only way to optimize your investing for tax is to put into a pension or an RA. But the tax-free account is such a great complement to those tools. It's a very different one where, RA or pension, you're putting money in pre-tax. So what that means is you get to deduct the amount that you put into your pension and your RA, you can deduct from your taxable income. So it means you pay a bit less tax today. But when you take it out later, you do pay tax on it. So it's deferred tax. So that money is allowed to grow before you've paid tax on it. But when you take it out, you do pay tax. The TFSA, on the other hand, is after-tax money. So, once you get paid your salary and you've already paid tax on that salary, then you can invest that money in the TFSA. But now you're done. There's no more tax. Once it's in that TFSA account, you don't pay any tax. And the beauty of the TFSA is you're much less restricted in where you can invest it. So, pensions and RAs have restrictions on where you can invest. You can't invest fully offshore, for example. Whereas, a lot of the growth people have seen over the last 10, 20 years has been, offshore equities, where you're able to put money just into the S&P 500, for example. That would have got fantastic growth. And so if you had a TFSA in 2015 and you put it all into the S&P 500, you'd be very happy with where you're sitting today. With those 10 years of growth and no tax, and potentially can leave it there, until you retire. So I think a very underrated instrument or tool for investing, and important that it's part of your mix. I think, people very easily think like there's sort of a one size fits all solution, or, if I just follow this Finfluencer's advice, I'm going to get rich. But everybody's situation is unique, and there are some basic issues to follow. But in general, it's a combination of things. It's the emergency fund, it's the tax-free, it's the other, retirement accounts that are tax optimized. And then there's all the other type of investing you can do, for goals, short-term, long-term goals. So we set ourselves a mission of getting 1 million tax-free savings accounts enabled. It's a pretty audacious goal, but that's what you want to make happen over the next few years, and we're pretty determined to hit that goal.
Yeah, yeah, yeah. That's incredible. And now, how do you now this money? How do you allocate, or how do you select this trusted funds or this custodians of this money? What is the selection process? Just so for people to think, okay, so my money, I'm investing it with Fynbos money. Of course, earlier you mentioned the Alan Cray Fund. What is the selection process for people to have that confidence to know my money is safe and nothing funny will happen?
Sure. Yeah. Look, I think the industry in South Africa is very well regulated. There's the FSCA keeps a pretty tight handle on things, and you first and foremost should make sure if you are investing that you're investing with someone who is licensed. So we're operating under a license from the FSCA. And what that means is there's a whole lot of checks and balances in place to make sure, we're following due diligence and so on. But from our side, we made a conscious decision that Fynbos is just going to be a digital intermediary platform. We want to give people access to investments that are not easy to get access to directly as an end user. And we want to make that process simple and understandable and not intimidating. So again, coming back to this idea of just empowering people and giving them confidence. So when you invest with us, we never actually touch your money. What happens is we work with a third party who is a payment processor, so a licensed payment processor, also registered with the Payments Association of South Africa. They're a company called Presium. And we document all of this on our website. It's sort of a key piece of our philosophy was if you want to give people confidence and trust, you need to be absolutely transparent. I mean, I think short of publishing our salaries, we've got everything available on the website. You can go and see a flow diagram of exactly how we handle money, how we handle personal information. It's all there. So when we run a debit order, for example, against your account for investment contributions, those go straight to Presium. Presium hold that in a holding account for us, and on a daily basis, we send money from Presium to our administrators. And our administrators are a company called the Automated Outsourced Services. And what they're responsible for doing is actually placing the buys and sell orders. If for example, you're buying, units of an ETF or a unit trust from from a asset manager, they take responsibility for issuing those actual instructions and maintaining, nominee accounts and keeping records on who owns how many units of what assets and what funds and all of that. So they are the highest level of FSP license that you can get. So if you if you were to look at the various licensing types, you get a category 1 license, category 2, and a category 3. So we operate in a category 1. What that means is we are licensed for advisory and intermediary services. And within each category, you can be licensed for specific products as well. So it's always worth seeing, what are the products that an FSP is licensed for. So it could be insurance or different types of insurance, different types of investments. The most common in this space would be what are called collective investment schemes. So things like heat trusts and ETFs. So we're licensed to intermediate. And that means we can assist a retail investor, an end user like yourself, getting their money over to an administrator and onboarding you, doing your identity verification, all of those kinds of things, and assisting you to execute the transaction. So we don't do it. We don't do anything without explicit instructions from a customer. We're not a discretionary investment, discretionary FSP, which is what a category 2 FSP is. So there you're talking about people who manage investments on behalf of someone and are licensed to actually buy and sell without explicit instructions. And then the category 3, like I said, is the highest license. And those are typically your administrators, or some people call them linked investment service providers. And they're the guys, they're the entities that are actually managing these nominee accounts and interacting with each of the asset managers to get access to the units or the ETF shares or whatever the case may be. So we work very closely with an administrator. We instruct our payment service provider to send the money over to them. They do the buying and selling. They keep a record on their books of, what you own and how much. And we keep a record on our side as well, so that when you log into the platform, we could tell you've invested, 36,000 Rand into, let's say, the MSCI World Fund at 10x. And that meant you got a certain number of units, and we can tell you the value of those units. So we're just there as an intermediary between you and your investments, to just make the whole process more convenient, to make it more accessible to end users who historically would have had to go to a financial advisor, fill out lots of paperwork, visit their advisor or call their advisor whenever they wanted to find out what was happening with their investments. So from our side, it comes back to that mission of empowerment, empowering people to do these things themselves and doing it in such a way that they feel confident.
So how have you managed to continue and to build trust in a space that is historically managed by banks? When we talk about the tax-free savings account, someone might say, okay, now I know about it. I'll just go to a bank to open a tax-free savings account there.
It's a good question, and one of our biggest challenges, obviously, in starting. Nobody knows who we are. Nobody's ever heard of us, and so the goal from day one was, was to be absolutely transparent, to be very clear in what we do and how we do things and how we operate. And to make sure everything we do is very customer centric. So, we don't see our product as just the thing that people log into and use. Everything we do is part of the product. So customer service is really important to us. Everyone in the company does customer service. I do a lot of the customer service myself directly. We handle the majority of our customer service through WhatsApp, and we've got a system internally where anyone can view those support queries coming in, and everyone in the company takes some responsibility for customer service. And that's just sort of the culture we've tried to build from the beginning, that the customer comes first. And I think it's a long-term investment that we have to make ultimately to compete in this space. If you want to play in financial services, trust has to be like your number one priority, trust and credibility. And it's another reason why we picked the business and pricing model that we've got. So I think one of the biggest challenges with the industry today is you have this pricing model that doesn't necessarily align everyone's incentives. When you come onto our platform and you are buying, putting money in for an investment or taking money out or moving money between investments, none of that changes how much money we make from you as a customer. You pay your flat monthly subscription and that's all. We're giving you a platform.
Yeah.
Whereas, if you go to other platforms or other services for similar products or services, you'll find there's a percentage fee charged on, commission based on any transactions you do, or there's a fee based on which products you earn, and the person or the platform that's selling you that product is earning a commission. Now, that's just traditionally how it's been done. So I've got to obviously be very careful not to say the industry is full of crooks, but there's certainly, a lot of people out there who are making easy money without adding a lot of value. And that's not ideal. And it comes down to this thing of incentives. I think, we want to, over time, prove to the market that if the incentives are correctly aligned,
everybody wins. We earn our money for building a great platform and charging a fee for access to that platform. And our customers get the best deal and the fairest deal on, what they're looking for, which is confidence in managing their money.
Yeah, yeah. And talking about that, how do you manage the psychology of an investor in an age where most people expect quick returns, especially young people and those that are new to investing? They want it quick, they want it now. How do you manage that? And talking about, yeah, we don't want to say there's crooks all over, but they
The
they could be
scammers, yeah.
there. Scammers are there, and these big finance words are used that we hardly understand, and we just say yes to because we're thinking it's big words and it makes sense. How do you go through that with your client, your first time client? Do you offer advice for someone who's thinking, okay, I think I need my money now, I want to take it out?
Yeah, it is a challenge, and unfortunately, I think the industry has created this situation for itself. Sadly, it's like any industry where if the good actors don't speak up against the bad actors, then it becomes harder and harder to tell the difference between the two, right? And there's
Mm,
no doubt that there are a lot of fantastic financial advisors in the industry in South Africa and people who really do care about just doing what's best for their customers. But there are also enough people out there who are just happily earning commissions or selling products and calling themselves advisors. And I don't think that does a huge disservice to the people who are doing a great job. So from our side, the answer has always been just to meet people where they are, to keep it
yeah,
simple, to try and explain concepts simply, not to oversell. And again, I think this comes back to incentives is, we're not incentivized to sell you extra products or to, push you in a particular direction. We charge a flat fee, you either pay that fee or you don't. And so then we
mm,
feel confident we can be objective. We can try as best we can to give you clear, objective information and knowledge about, what you're doing and what you should be doing. And we're very careful
mhm,
not to give direct advice because we're not advisors. We have an advisor on the team, and he can do personal engagements with people, but we don't do it as a routine exercise just to give somebody ad hoc
mm,
advice because you can't do that. You're not actually
yeah,
allowed to do that by the FSCA. If somebody comes to you for advice, you need to do a proper analysis of their situation. You need to understand their needs. You need to keep a formal record of the advice you've given. You need to check in with them again after a year. It's an expensive and time consuming process. So if you want good
yeah,
advice, you can get it, but expect to pay for it. And if you're not paying for it, expect it to not be good advice, I guess
yeah, yeah,
is the fair
yeah,
assessment. So it
yeah,
is it is difficult. Like I think you're right that there's definitely a propensity, especially amongst younger people these days, to be looking for, get rich quick schemes or, ways to make money faster. But the sad reality is the only, sure thing in investing is that time is your kind of superpower. Time
yeah.
is the critical ingredient in compounding growth. And
Mhm.
so, patience and consistency are always going to beat get rich quick schemes. If it was that easy, everyone would be doing it, right? Um,
Yeah,
the
yeah,
nice thing, the
true.
nice thing I think about the current generation of young people who are, starting to earn money and looking for ways to invest is there's been 10 or 15 years of really interesting developments in this space, things like
Y-
cryptocurrency and so on, which have
Yeah,
changed the conversation and made it much more normal for people to talk about money and what is money and how does it come from and what are different types of investments and what is risk and so on. A lot of conversations that people wouldn't have even had 20 years ago are much more commonplace, which
Yeah.
is great, but there's still a lot of ground to cover. I think money is still too taboo for a lot of us, especially us conservative South Africans. We don't talk about money.
Yeah.
We don't learn about it at home enough. We don't learn about it at school enough. So that's part of the challenge for us, is to in terms of giving people confidence, it's not just giving them a product, it's giving them education and knowledge, helping them feel empowered to do this stuff for
Mm.
themselves.
Yeah, yeah. And you're right, there's this shifts happening as you talked about the cryptocurrency and all of that. And the younger people know more about that. And when you look at the outlook and the kind of clients you're onboarding on your platform, do you think the young generation is now starting to be open? They are ready for retail investing?
Absolutely. I think, yeah,
Mm.
the cryptocurrency sort of wave has certainly helped with that. But I think the current generation, if you're talking about people in their 20s and 30s, um, a lot of them are much more open to talk about things that maybe were considered taboo generations before. So they're much
Yeah,
more comfortable having these conversations, talking about money, talking about what they earn and where they're investing and what they're doing, which I think is great. You've got to have these conversations, and we've got to be willing to engage each other and challenge each other on these things. So I think what was missing maybe is an easy place for people to take that knowledge and do something with it. So
yeah,
that was the gap that we really wanted to fill in the local market. We saw a lot of examples in other markets of great products filling that gap, but not great examples in the local market. I think your big traditional players are living, on borrowed time, in my opinion. They still charging
yeah,
very high fees. They're kind of big and cumbersome and inefficient. They really struggle, I think, to connect with the younger generation, offer them products that are relatable and that they want to use. Somebody in their 20s or 30s, they want something mobile first. They want it on their phone. They don't want to spend hours filling out paperwork or anything like that.
yeah,
So I think there's a lot of ground for your sort of legacy financial institutions to cover to try and catch up. And then there are
yeah.
some great newer other businesses coming into the market in South Africa as well, along with us. And I'll give kudos to a business like Easy Equities. I think they were the
Mhm.
pioneers. They were the
Yeah,
first ones to get out there and give South Africans access to all of these products and the ability to invest without having to go, through the big old legacy wealth and asset managers. And
hmm,
we're hoping to do the same. I think Easy Equities have done a great job on many things, and we want to,
yeah,
fill gaps that we think that they've left behind.
yeah. That's amazing. And talking about regulation, what regulatory approvals and compliances did you have to obtain before you could launch? And was it a long process?
Yes, so we did have to get approval. So as I said, we're operating under an FSP license, and
Right.
and that is important. In South Africa, the everybody who plays in this space does need to be licensed, and the approvals and the checks that you have to go through, I think, are important. And I think the FSCA have got the balance pretty right. I would say on the banking side, things are a bit too stringent in South
Hmm.
Africa. My background is more banking
Yeah,
and payments. I think it's really difficult in South Africa to launch a new bank, very expensive,
yeah,
and I think that's
yeah.
problematic. But I think on the investing and saving side, I think they probably got the balance about right. They've got different levels, and it's a little more. What I would call sort of risk based and based more on what you do than just being a blanket, you either are or you aren't licensed. So like I mentioned earlier, we're a category one FSP. We're operating under category one
Yeah.
FSP license, but then you have other categories depending on what you do. And obviously those tie back to also the specific products you're approved to be involved in and so on. So I think the regime is pretty good in South Africa, and it certainly does help to keep bad actors out. It's not it's not a silver bullet. Um, and
Yeah.
and we
Yeah.
have, in order for us to uh, operate the way we do, we have a person in our founding team who has done all the exams and has been working in the industry for close to 20 years now, and done all the necessary qualifications to make sure that we are doing all the right things, and that people's money is obviously protected and being
Yeah.
custodied
Yeah.
correctly.
Yeah, and you're right. As you say, those regulations and the steps one has to take to protect, obviously, people's money, the public, and filter out the bad actors. And now, but in the same breath, when you look at it, for startups like in fintech, um, to innovate and to stay agile, you have to move quick. And do you think this process is helping in for startups also to try to innovate faster and move quicker?
I think in South Africa, like I say, I think the on the savings investing side, I think we're getting the balance about right. It's really difficult to know. I guess, if you get the balance wrong, you find out down the line all these people who've been scammed. It's
Yeah,
it's it's
yeah,
very easy to launch a Facebook page or an Instagram account or a website or
mm,
publish an app, right?
yeah,
And you can
yeah,
spend a bit of
yeah,
money being flashy and getting users. But at the end of the day, how do people know, when they send that money over, that it's actually being properly managed and properly cared for, and also that the business actually knows what they're doing and the business is being run effectively. So, part of the licensing process is not just making sure we, check people's identities. It's also, do we have a
mm,
business plan? Do we have money in the bank that can sustain our business? Are we still going to be around in a couple of years' time? Because that's obviously should be a concern for people. If you're working with a new fintech,
yeah,
and you invest your life savings with them, what happens in a year's time if that fintech just doesn't work out? 90%
yeah,
of startups
yeah,
fail. So the traditional sort of startup mentality of, we'll move fast and try and get stuff done and fail fast. It can't really be that way in financial services, because if you're dealing with other
mm,
people's money, what happens when you do fail? So I think you
yeah.
got to find that balance. And I feel like the South African market, they're getting the balance pretty spot on at the moment.
Yeah, that's great. And talking about that and protecting people's investments, we live in the age of hype, where clicks count more than facts, and social media can literally turn anyone into an investment guru overnight. And you'll find someone there on TikTok and advising people, do this, do that. Subscribe here. What advice can you give to young people, even old people do get scammed, to be able to spot the difference between the hype and a real credible opportunity?
I mean, I think first and foremost, if it seems too good to be true, it's probably a scam. It comes
Mm.
back to
Yeah,
the conversation we had earlier, right? About getting rich quick. You like
yeah,
don't there are no get rich quick schemes. Don't expect to stumble across one and think you're the only person who's found it and you're somehow special. Unfortunately, the chances of that are probably, you've probably got more chance of winning the lotto than that happening. I think
yeah.
you've got to, unfortunately, in a sort of digital age, and now with AI and the ability to do impersonation and so on, I think you've got to just,
Mm,
unfortunately, always be skeptical. Anything you come across online, you should just assume is made up or AI generated or is nonsense unless you can verify it. And I think we got to go back to trusting people we trust. Talk to people ask around, do your research, and that's interestingly another, I think, great side effect of what the whole crypto era did is there were
Yeah.
unfortunately a lot of people who lost money. They bought into scams or they bought into
True.
NFTs or whatever the case may be. And
Yeah.
they paid school fees, right? So
Yeah. Yeah.
hopefully people have gotten a little bit wiser and they've realized, like, take your time. Don't ever feel like pressured or rushed into doing anything. If somebody's pressuring you or rushing you, there's a good chance it's a scam.
Yeah.
Be very careful about any links you click. If you get a link via SMS or WhatsApp and it's not from a number, be very careful about that. And I think one that us technology people take for granted that people don't realize is always make sure when you click a link or you visit a website that the domain name is the one you expect. It's very easy for people to trick you,
Ah.
send you to a website that looks
Yeah.
right, but go look in the address bar, go look, what's the actual domain name? Is it the one you expected?
Yeah.
Because, our website and our product uses the domain name Fynbos Money, and we've got a few other
Yeah.
domains registered, Fynbos app, fynbos.dev. But it's very easy for somebody, to register a scam domain and just, you know, make a copy of our website and put it up and then try and direct people there. And we're fighting that all the
Yeah.
time. We have we're monitoring all of our online and social media and so on and watching for scammers, and we see them all the time. We
Yeah.
have, I would say we probably have blocked over 100 online scammers who,
Hmm.
when we do a Facebook post or an Instagram post, you'll see them post a reply and they'll say something like, you know, contact us on WhatsApp, and they'll put their number or something.
Oh. Yeah.
And anyone
Yeah.
who falls for that, then they will try and pretend that they are famous. They'll try and impersonate us,
I
and they'll
see.
try and persuade people to invest with them. And the obvious telltale
Yeah.
sign is if they're rushing you, if they're A, promising you immediate returns, or B,
Mm-hmm.
trying
Mm-hmm.
to rush you into making a deposit, walk away. It's
Yeah.
almost certainly a
I
scam.
see. Yeah. 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 They want you to make a decision under pressure. Do it now.
Exactly,
Sign up
exactly.
now.
And
Yeah.
that's the
I
trick, right?
see.
So
Yeah.
it's definitely a challenge and one we're constantly working on. And I see a lot of the financial services businesses in South Africa putting a lot of effort into this. I've seen, some great work from brands like Capitec, doing
Mm-hmm.
things like notifying people when they receive a call. So I think, such a simple thing to do, but so effective is
I
if
see.
Capitec calls you, they'll first send you a notification on their app so that you know to expect a call. So you don't get this call that
Yeah.
you're wondering, well, is this really Capitec or not? How do you verify that? Those are, simple
Yeah.
steps that anyone can take to try and just make things safer for the end customer.
Yeah, yeah. Thank you. Thank you for that advice. And Fynbos Money is a digital platform, and we talked about AI earlier, and we can see this adoption of generative AI is emerging. It is increasing, and I don't know, without divulging much of your strategy, what is on the pipeline for Fynbos Money in that regard, in those AI spaces and all of that fancy tech?
Mm. Wow. I mean, it's pretty exciting, right? To seeing what's happening with AI.
Yeah,
It's exciting and scary.
yeah, yeah,
That this is like we were just saying, the scary part is how quickly the scammers are using it to get
yeah,
away
yeah,
with things. But yeah, look, of course, we're doing a lot of work exploring AI and looking at ways that it can help us achieve our mission. I think there's a
yeah,
lot of scope for AI to really change the game in terms of financial advice and wellness and um, helping people, empowering people to understand their finances better, make good decisions. I don't think it will entirely replace advisors. I think the first
Yeah.
financial advisors that are going to be replaced by AI are the bad ones. That's the reality. I think if you're a good
Yeah.
financial advisor who's built up trust from your customers, who is actually delivering value, if your customers, really
Mm.
value your advice and are not just getting products from you, then you're going to be hard to replace by an AI. The AI is just going to help
Sure.
to make, money decisions. It's not going to help with the emotional connection. Money is a very emotional topic, and you mentioned
Yeah.
it earlier. Who's the person that stops somebody selling in a panic when the markets are down? It's not going to be an AI.
Yeah.
It's going to be a human financial advisor who has their clients' best
Yeah.
interests at heart. And so I think the this is a really important part of our strategy, and it's not really giving away any of our product roadmap. But for us, our strategy is to build a really powerful, trusted brand, and I think that in an age of AI is critical, because at the end of the day, the AI technology means technology is not going to be a differentiator for anyone anymore. It's going to be too easy
Yeah.
for people to just build new technology or replace existing technology. What's really going to matter is, do people trust you and your business? And that comes down to, credibility and transparency, and proving over time, regularly, that you are trustworthy and that you have your customers' best interest at heart. So we'll continue, looking at AI as a way to unlock new
Yeah.
features and unlock new capabilities for our customers. Um, but I think the whole industry is going to be facing some serious disruption as a result of AI, and we expect
Yeah.
that if we've done our job properly, we will benefit from that. We won't be threatened by it. It's exciting
Yeah.
times.
Yeah, yeah. Thank you for that reassurance. And Adrian, for someone listening to us right now, holding their phone, thinking, I'm liking this, I feel educated, I need to start investing, and they're holding their phone. They want to start right now. What is the process they can follow now to go on Fynbos Money?
So there's two things. I think if they want to go and read up and learn a little bit more about the basics,
Hmm.
they could go to
Right.
Fynbos.money, is our website, and there's two things they can do. Firstly, if they're feeling ready to go and dive straight in, just sign up. Fynbos.money, click on sign up. It takes about,
Right.
I think, less than 3 minutes is our current benchmark for getting signed up. And then once you're inside the app, you can decide, do you want to just start with an emergency fund, or do you want to go all the way and set up tax freeze and accounts for your kids and so on. The other
Yeah.
option is to learn some more. So we've got some pretty good learning material on the website as well. There's a
Okay.
link there in the menu called Learn. If you click on Learn, it'll take you through to our learning section. And we invested quite a bit of time in trying to take this really big, complicated body of knowledge and condense it down to
Mm.
a handful of pages that just give you the basic understanding you need. And then hopefully,
Yeah.
if you're feeling sort of empowered by that, then you're ready to sign up and start putting some money away. But without a doubt, the first thing for everyone, get an emergency fund.
Yeah, yeah, yeah. It's important. Thank you. And in closing, Adrian, what is your favorite book, or a book that you read and you felt it was impactful in your life that you could share with us?
Wow, so I'm gonna cheat, and I'm gonna tell you one that I'm just started because I'm really enjoying it
Yeah.
so much. So I think it's already the story itself has been impactful in my life, but I only just started reading the
Right.
book, and that's Stalking Giants. It's actually the story of Capitec, which I mentioned earlier. Um, Really
Ah,
interesting
okay.
business, and I think from our side of business that we align with a lot on values. I think the way they've gone about building a product that is very customer centric, where
Mm,
they focus on how do we add value for the customer, and knowing that in the long term, that's what's gonna make the difference. Yeah, I think we strongly resonate with that within Fynbos. So I've really enjoyed getting started on that book. I'm planning to finish it next week when take a few days off for my kids' school holidays.
Yeah. Wow. Awesome. Thank you. Thank you, Adrian, for coming on the pod. We enjoyed this interaction. We learned a lot about investing, and thank you. I can't thank you enough. It's been
Thank you
awesome.
so much. It's been lots of fun.
Thank you for listening to our show this week. If you enjoyed the show, please click follow on your podcast app. That way you will not miss the next episode. If you need to take your business ideas to the next level, the good news is I work with entrepreneurs and companies to navigate challenges they may face, to pivot effectively, and to grow strategically. You can reach me at info@mergeconsulting.co.za or visit our website to explore how we can work together. Let's turn your vision into action. I'm Defuo, and you've been listening to my Entrepreneurship Journey podcast.